So when is £1 million not £1 million? David Cameron famously once said he wanted the inheritance tax nil rate band for a couple to be £1 million. Despite not being the Prime Minister any longer, he's finally getting his wish, and this is about to start happening with effect from the 6th of April 2017, with the introduction of the new Residential Nil Rate Band. The Residential Nil Rate Band will commence on the 6th of April 2017, when each individual will receive an extra £100,000 and a further £25,000 each year until it reaches £175,000 in April 2020. The standard nil rate band is to be frozen until April 2021, after which time both bands will increase in line with CPI. This means that in the tax year 2021, each individual will be able to pass on up to £500,000 and a married couple or civil partners up to £1 million. Good news so far. So who benefits the changes? The Residential Nil Rate Band is only available on death, and as you'd expect, it comes with a few conditions. A qualifying residential interest. The Residential Nil Rate Band is only available to those who hold or have held a qualifying residential interest immediately before death. They must have owned all or part of the property at the time of their death, and the property must have been their residence, but not necessarily their main residence. Therefore, ownership of an investment property does not qualify. Sorry, buy-to-let landlords, you will not be able to take advantage of this with your property investments. Those who have released equity will be affected, as it is the net value of the home that will be used. Any outstanding loan against a property will have to be deducted first. There are provisions for those that have sold a property. For example, if the deceased owned a property after the 7th of July 2015, which is subsequently sold or downsized because they're moving into a residential care home, they will still benefit. So, lineal descents. The property or cash of the deceased downsized property needs to be closely inherited. What I mean by this, it must pass to a lineal descent such as your children or grandchildren. Includes adopted children, stepchildren, foster children, and those under guardianship. A spouse, surviving spouse or civil partner of a lineal descendant who is not remarried by the time of the property ownership's death will also benefit. If there are no lineal descents, there will be no Residential Nil Rate Band available. So transferring the unused allowance. Similar to the standard IHT nil rate band, the unused Residential Nil Rate Band can be transferred between spouses and civil partners and must be claimed within 2 years from the end of the month in which the second death occurred. Where the first death occurs before April 2017, an unused Residential Nil Rate Band of 100% will be deemed to be available when the surviving spouse or civil partner subsequently dies, regardless of whether or not the first to die owned a qualifying residential interest or not. Large estates. There is also tapering of the threshold for large estates, which is initially set at £2 million, reducing the Residential Nil Rate Band by £1 for every £2 over the threshold. So when the full value of a couple's estate exceeds 2.7 million, there will be no Residential Nil Rate Band at all. When valuing the assets, it is the net value of assets held on death. It does not include any lifetime gifts previously made by the deceased or make allowances for any reliefs such as business property relief, agricultural property relief, etc. So, for example, to help explain the Residential Nil Rate Band, let's consider a scenario. So Susan dies in 2017, leaving her husband John and their son Tom. The family home is valued at £400, let's say, and their other assets total £600,000, all being held jointly between Susan and John. Susan leaves everything to John. The spousal exemption applies, meaning the ownership of the family home and other assets passed to John without any inheritance tax being due, and Susan's standard nil rate band and residential nil rate band are unused. Subsequently, in June 2020, John dies and leaves his estate to Tom. The house has increased in value to $600,000 and the other assets are now worth $800,000, giving a total estate of $1.4 million. John's executors can use his nil rate band of $325,000, and as he owns a qualifying residential interest on death, the residential nil rate band of £175,000 applies. As Susan left everything to John, her executors can claim her unused nil rate band and residential nil rate band. John's estate can therefore benefit from the total of $1 million in the nil rate band, 2 times £325,000 and 2 times £175,000. If the value of the house had been less than £350,000 at the time of John's death, the total amount of the residential nil rate band to John would have been limited to the value of the house. After allowing for the available nil rate bands, the residual value of the estate of £400,000 will be taxed at 40%, giving a tax liability of £160,000. But what if Susan had utilised her residential nil rate band when she died? So Susan left a share of her family home, which was held as tenants in common, let's say, to Tom, using her residential nil rate band of £100,000 and £100,000 of her standard nil rate band. John therefore received the other assets using the spousal exemption. On John's death, Susan's residential nil rate band and part of her standard nil rate band have been used, but his executors can claim £225,000 as Susan's unused nil rate band. John's estate consists of one half of the family home, now worth £300,000, along with the other assets valued at £800,000, giving a total of £1.1 million. The total amount of nil rate bands available to offset against John's estate is equal to £325,000, John's nil rate band, £225,000 from Susan, and £175,000 of John's residential nil rate band. Total of £725,000. The tax liability of 40% exists on £1.1 million, less the £725,000. So we have £375,000 taxable, which means a tax bill of £150,000. So then £1 million nil rate band sounds a great idea, and for the right clients, the right people, it will provide valuable HT benefits, but not everyone will be able to take advantage of this. In addition, not only are inheritance tax receipts expected to increase, even after taking into account the introduction of the residential nil rate band, the number of estates suffering IHT is expected to increase. Complicated subject. My name is Martin Dodd. I look forward to talking to you once again on tax and financial topics.